But coffee for me, you know why I got back to coffee? I just missed my cup. I saw people walking around from Starbucks going into the exchange and into their offices and stuff, and they had a cup, and I wanted a cup. I just wanted to be holding a cup. It was almost like a group acceptance kind of thing. The little espresso cup for me it's similar to like a leather jacket or my motorcycle boots. For me, it feels cool to have a little cup of espresso.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situation, or needs. All participants in this podcast may have a financial interest in any or all of the products or securities mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objective, financial situations, and needs. If any private products are detailed on this website, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to episode 32 of The Money Path with Bob Iacchino and Mike Arnold, founders of Path Trading Partners. I'm your host, Stafford. Today's What in the Why segment is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a conversation that's happening already on the markets.
We've got a lot of information this week. It's packed. It's
Good.
It's packed.
Yeah.
You don't even have to say anything, Bob.
Christ.
It's a big show. The market was really good this week, right?
Oh, well, yeah, well, hey. It's partying like it's 1999, quite literally. Yesterday, so that's Thursday, for the first time since December 31st, 1999, all three U.S. indices posted concurrent record highs.
Wow.
Yeah, they were calling it a triple gold in honor of the Olympics.
I don't get that.
Triple gold. I don't know.
I don't know.
Gold.
But I would have gone with a reference
medals.
to 1999, which was not an Olympic year.
Did you say we was?
We was. Yes,
we was not. Yeah. It's in honor of the Olympics going on now, Michael.
I understand the Olympics are going on now, but they weren't going on December 31st, 1999.
Michael Phelps.
Michael Phelps? What was his first Olympics? Was it the 2000 Olympics?
No, it's 2008.
No, it wasn't.
Michael Phelps? Yeah, it was.
Not his first Olympics.
His first gold.
His first gold. Yeah. What was his first Olympics?
I don't know. Don't care. You place sixth in America, no one cares about you.
First Olympics was it two? Hold on. I'm curious. Yeah.
He's 31 now, so how it couldn't be.
He was Michael Phelps at the Sydney 2000 Olympics.
Yeah, what did he do?
I don't know what he did.
He partied like it was 1999.
Yeah, it's right after 1999. So, and everything had just made new highs. Huh. Yeah, that's your response?
Yeah.
He came in fifth in the 200 fly.
Everyone forgets you if you didn't win. This is America.
And his first golds
no participation trophies
were
here.
In 2004.
I wonder if the Olympics is going to change into participation medals.
So you were
I watched. What was I wrong
about?
What was I wrong about?
His first golds were in 2004.
Was it really?
Yes.
Okay.
He got 1, 2, 3, 4, 5, 6 golds in 2004.
Okay.
So
I stand corrected.
You better be corrected. I want a full formal retraction.
Well, look, I just said I'm wrong. Unlike you, I've never heard those words come out of your mouth. But I just said I'm wrong. So.
Yeah, but that'll be edited out.
What, the wrong part?
Yeah.
We don't have to edit you saying you're wrong ever.
Hey, I've been wrong about being wrong.
Yeah, what's that? I've seen that meme. One time I thought I was wrong, but I was mistaken.
Yeah, exactly. Speaking of the Olympics, what's silver doing?
Oh, there we go. That's a real segue.
Uh-huh.
Wow.
I've been practicing. I didn't actually come up with that ahead of time too. It just happened.
Now I need to keep that Olympics talk in the show.
Yes, you do.
Wow. That was amazing.
Yeah.
Silver did almost exactly what we said it would do.
What? No, it didn't.
Almost.
What did we say it was going to do?
Pull back to 19 and then rally. Actually, it's something I said.
I talked about it could trigger a double top, which it did not.
Right. That's still what you said, because you said it could trigger.
Right.
You didn't say it had triggered.
No.
I was on Yahoo Finance, and I said I expect to pull back to 19, and then a rally from there, pull back to 1927.
Well, so you missed it.
So sorry, I was
27
wrong.
cents. You were wrong.
I was wrong again. This is going to be a show. We're going to title the show the amount of times Bob was wrong.
And he still got a participation medal.
And you know what? It'll have the most downloads ever, because people will be like, Bob's never wrong. I have to listen to this. This one I have to listen to.
We already have like 4 show opens. What am I going to do?
You're going to have 4 show opens. The whole show is just going to be one big long opening.
How about this? How about this about being wrong soon? I want to buy American Airlines.
You jumped the gun on that.
On what? Do you have that in the notes?
No.
Okay, so how am I jumping a gun?
Because that's not part of this segment.
Well, I don't care about segments. Please. I am a rebel and a scholar. Is that right? No.
You're a rebel?
It's gentleman and a scholar and a rebel without a cause. I am a gentleman without a cause.
So.
Gizmodo makes new Nike sunglasses.
Hey, did you...
I saw that.
Did you see those sunglasses?
Yeah.
Is it going to turn around Nike stock?
No. I mean, first of all, they're for elite runners, right?
So you're buying a pair? They're $1,200.
Yeah, I saw. They're for elite runners, right?
That's not you?
Yeah, I'm about as elite a runner as I am elite a basketball player at 5'9". That's right, I'm 5'9". For all of my fans on television, everybody says I look bigger.
Well, you'd look cooler, though, in these sunglasses.
Those are ridiculous.
So as you were running for your next espresso, you could be wearing these sunglasses for $1,200.
Listen, they feature a lightweight but reinforced frame, which apparently is by the tendons in your arms and legs, and to help reduce fatigue on specific of a runner's head. Sorry, the thing I was reading, I just hit forward, and now I lost the article. Did it sound like I was reading? Because it was.
So, well, if you were wearing those sunglasses, you wouldn't have been fatigued in your head, and you wouldn't.
Hold on. To help reduce stress and fatigue on specific parts of a runner's head, the wing features an oversized sun shield that extends past the temples and transitions into a wraparound silicone strap that helps to evenly distribute its weight, or what little weight there is, since they're just 26 grams. You'll barely feel the Nike wings on your face.
For $1,200.
Yeah.
I was just wondering, because that'd be something I was expecting you to be sporting a pair on TV one of these days.
Elite runners?
Yeah.
If he would wear them, he would be very crude.
Go ahead, Mike.
What? Are we talking now about crude?
I mean, your segues are terrible, and Stafford just set you up for one. And you couldn't even. I mean, it literally has to be. You can't
set me up for a segue.
It has to be a bad segue, and I mean, Larry, I'll set you up for a bad. How about I'll set you up for a bad crude segue. How about this? Yeah. So my dog is running.
Okay. Well, speaking of that, do you remember last August 6th that the internet just marked another major milestone? The first website was created back on October 6th, 25 years ago, 1991.
All right.
That's about your dog.
I guess. My dog has its own Instagram page.
Does he?
No, but I'm going to make one.
Okay. Well, speaking of crude.
I got 4,000 some odd pictures on my phone, 2,500 of them. My dog. Speaking of crude.
You made a crude call this week.
I did. I wanted to buy. So I made 2 crude calls this week. I said that this was going to be an up week in crude, and I said that on Wednesday when crude was down, after the draw on gasoline and the build in crude stockpiles, in the stockpile report, the EIA status report for crude oil, came out and showed a build in supplies of crude and stockpiles of crude and a draw on gasoline. So I was on CNBC Futures Now Stafford, I believe you have that clip.
No, I do agree with that, and I agree with Scott, but I think this week is likely to be an up week, although not by much. We settled at 41.98 last week, so 42.05 is enough to call it an up week. Obviously, what I'm looking for here is refinery throughputs to start to slow down. We haven't seen that yet. You need 2.2 barrels of oil to make a barrel of gasoline. So as long as we're seeing those draws, and we're at the peak of the summer driving season right now, you're going to see that crude pull out into the refineries. But as we fall off on that summer driving demand, we're not going to see it pick up like by global demand. And I think RBC and Scott are both right.
Anyway, what I was saying was I think it was going to be an up week in crude, and I think I only mentioned about 42.05. As what I meant by that was that's all it takes to be an up week because we closed at 41.98. But what I referenced was the fact that so the summer driving season goes from April to August, and we're in August. We're in the first half of we're in the first half of August. So it's going to be winding down soon, and those stockpiles won't be refilled at such an aggressive rate. Now, what will happen is refineries will go into what they call turnaround, and refinery turnaround is them retooling the refineries to meet EPA standards and create winter blend gasoline and convert some of the refinery to create heating oil for the Northeast to heat their homes. So that's what refineries are, and they have to shut down to do that. So you're going to see refineries are really the consumer of crude oil. It's not the people, it's the refineries. The refineries buy it, and then they refine it, and then we buy the gasoline, right? So refineries are going to have lower demand, so those builds are going to keep coming, and they're not going to replenish the gasoline at the rate that you would see in the middle of the summer driving season. So these builds could continue. So I thought it was going to be an up week of crude, and then I thought we'll slowly drift lower after this up week. Now, it's gone higher than I thought. So, looking at it again, and here's one of the reasons. If there's a refinery fire in Louisiana, a refinery called Motiva, which is the second largest in the Gulf, it's about 225 barrels of product. 225,000 barrels of product a day that comes out of that refinery. And we don't know what the damage is yet. So that refinery, at least parts of it, are going to be shut down at some point. Whether it's a big enough fire to shut down all that supply, I don't know. But essentially, prices rallied because the hedgers were buying up product then. And that's why the price of crude oil was actually rallying. But the end result of that could be larger stockpiles of crude in the report, so speculators might sell it off. It's a confusing time in crude oil.
But it's still forming the nice technical pattern. It's still forming the right-hand shoulder rather nicely.
Yep.
So, on the head and shoulders.
Yeah, I mean, again, you just heard that clip, and I said I thought it's going to go to $30 at some point. So I think that'll happen before the end of the year. I think we'll see $30 on that, and then we might have a major long-term double bottom forming. Because if it goes back down there, there's very little hope for the U.S. to return to, significant production anytime soon.
Speaking of significant production,
okay,
this is a good one.
That's a good one.
No, Yahoo is launching Yahoo View. Its production, TV production, sort of. Look at that great segue.
Yeah, that was good.
See, now I don't get this. And then I'm going to tie this back to stock for a second, but I just thought this was fascinating. They're making a play for cord cutters. They're launching a new TV watching site called Yahoo View, featuring Hulu's free content. Mm-hmm. Why would I have to go to Yahoo View to watch?
I do have a comment about this.
Please, because I'm lost.
18 months ago, Yahoo bought NBC's Community, a very successful television show, and they launched Yahoo Screen and tried this exact same thing. And then they posted a huge loss and blamed it on buying television content that they had to pay to produce. So maybe they're not going to produce content, but they're just going to do a license from Hulu. But it seems like maybe second time's the charm for them to pull this off.
Well, Hulu's free content's not going to be free anymore. Hulu actually announced that a while back that they're going to be winding down free content. So it says that the only way to watch the current Hulu free content for free will be through Yahoo View.
Now, remember, we've talked about Yahoo. We were talking back in April, and it triggered a very large double bottom pattern back on the week of March 28th. Then it's gone sideways. The rising rotation zone has caught up to it. And now it's finally, and this is where we talk about these big long-term patterns. They can take weeks, if not months, to unfold. Yahoo stock is up this week. It opened at about 39. It's now up to 42.26. It's met the level that we do raise our stop for this pattern. And the minimum unfolding of this pattern is 43.25, which I expect we will see. We may even see it next week. And the maximum unfolding of this pattern is about 45.50. So it's taken a number of weeks since it triggered. Let's see, how many weeks is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's taken a bunch of weeks, like 16 weeks. But it's on its way now.
Time frame, please.
What do you mean time frame, please?
Was that a 60-minute chart, a monthly chart? What was it?
A weekly chart.
It's a beautiful, beautiful pattern on a monthly if you look at it. The high was, the peak of the double bottom was 36.39. And then, excuse me, the monthly close in March was 36.81. So closed 46 or 47 cents above that peak. And then it was just like Mike said, 1, 2, 3, 4 months of sideways movement, in which case a lot of people would be sitting there saying, this is going nowhere. What am I doing in this thing? This is going nowhere. And then, boom, there's the start of the extension and the start of the move. So we've talked about this before. It's a very, another good teaching moment is that when a pattern triggers, Mike and I don't ever look at the pattern and say, okay, I need this to happen in X amount of time. I remember hearing a fairly experienced trader, and by experience, I mean he's been around a while. I don't know if he made money or not ever, but he's been around a while. Say that if a pattern doesn't work for a while, the probability of it working goes down. I mean, I don't know where you could get data to support that. That made no sense to me.
That's why
it doesn't work for a while, it goes down. That makes no sense.
That's why you have a stop loss, right? So you can protect yourself if the pattern changes.
Right. I mean, and that, time doesn't really apply there at all. Again, I don't know where he got that data from.
You know who needed a stop loss?
Who?
The people who, the Bitfinex, the popular Hong Kong-based Bitcoin exchange that was hacked. Did you hear about that one?
Yeah, last week. Losing about 78 million worth of customers' Bitcoins.
70 million, yeah.
70 million.
The loss caused the price of Bitcoin to drop about 20%. It hasn't recovered yet to pre-hack levels. Well, I haven't checked it recently, but this is. Did you see what the exchange did?
No.
So, in the days following the hack, they were trying to figure out how it would reimburse affected users, and it wasn't all the users. It was only a subset of the users that lost all their Bitcoin. So the company now has posted that they will distribute losses amongst all the users to the tune of 36.067%. So
everybody's going to have a 36% stolen from them, essentially.
Yeah, they're going to get a 36% haircut.
Wow.
You want to explain haircut to people?
It's basically a price you pay for something, essentially. Like you go into a deal with somebody and they say, all right, we're going to pay you $10 million minus $1 million haircut. Means you're going to pay $9 million or get paid $9 million.
So that's interesting. That's like if you were in a bank and the bank they robbed like certain accounts, but then they're like, okay, everybody, we're just going to share it equally. We're not really going to just cover the losses. You were hacked, and so everybody's just got to take a 36% loss. Yeah, thought that was interesting. Now with a great tie into Volkswagen, did you hear they were busted again for cheating?
Yeah.
Yeah, they found 3 new secret modules that affect their 3.0 liter engines, which weren't supposed to be affected by this. Well, this is sort of major because these engines are in the Audi Q7, the Volkswagen Touareg, which I hate the name of that car.
Yeah, I do too.
Porsche Cayenne. So these are some high-end cars that have these 3-liter diesel engines in them. what they were doing, what these hidden modules in the chips did, they shut off the emission control systems after 22 minutes. So I guess the average time to take an emission control test, if you start up your car, pull into the bay, is like under 20 minutes. So this keeps the emissions going for 22, then shuts it off, so you actually get your better diesel gas mileage. And so, as long as you're not in emissions control, nobody knows that, hey, your emissions are really shut down, and so you're actually benefiting from the better gas mileage and everything else. And that was quite fascinating.
Yeah, the one part about that I saw is that since it's a software thing, it can be fixed fairly cheaply, where they can just go in and do a software fix. And I guess they're doing buybacks of the cars or cash payments. What happens with the cash payment? Do people have to use that cash to get their car fixed?
No, they can't. The
or do people just let them drive around with it?
The 2 liters cannot be fixed. The 3 liters have the urea, which lets it clean. So maybe there won't be a hardware need. Maybe it's just software. But Volkswagen has lost all trust with everyone. Even the German government is starting to sue them. And all the class action lawsuits from the dealers. So maybe the 3 cylinders can be fixed with software, but the 2 cylinders have to be out of the country and destroyed.
So people actually they got to go in and get their car bought back and buy a new car.
And they won't buy it from Volkswagen, I can tell you that.
No, I would. I mean, it's funny to me because what if you don't care about emissions or you think the EPA goes a little overboard and you can actually get a deal to buy another Volkswagen?
There are only a few states that don't require emissions, but the ones that do, like California, if you don't trade in your car and you bring that car into emissions, they will maybe take it from you.
No, I understand, but why couldn't you trade it in for a corrected Volkswagen? I bet you get a deal.
Well, you have to buy a gasoline car.
Yeah.
Not a diesel.
Yeah.
I'm just looking at the Volkswagen stock this week. It's actually up slightly. It didn't actually take a hit at all based off this revelation. It's still forming a massive bottoming pattern. We're in a massive horizontal channel that started in its sell-off last fall. Not touching the stock yet, but I will be watching. There's a critical level about the $30.50. If we get a close above there on a weekly basis, there's a huge gap that was left behind. So that's a level I will be watching for a completion of this bottoming pattern. Until that happens, not touching Volkswagen stock at all. And that is the ADR.
I was going to say, are you looking at the ADR?
Yes.
For what an ADR is, I don't remember which show it is. We discussed what ADRs were a couple shows back. They're American Depository Receipts, a stock that trades in a foreign country, but the United States represents a specific number of shares within an American Depository Receipt. It's generally owned by a bank, sold to you by a bank. But they trade on exchanges, though, for those of you that don't know what an ADR is.
No.
Damn, I wish I could remember what show it was because I could make people go back and listen to an old show.
You are a pro, Bob. Go for it.
I can't remember.
I got another bottom pattern to talk about.
We got
GoPro.
Do I ever get to talk about why I want to buy American Airlines?
Yeah, later in the show.
All right, just let me know when.
When we get to the up and away segment.
Mm-hmm.
So GoPro's made a low back in May 862, but it's been forming this bottoming pattern for pretty much of all of 2016. It sold off substantially last fall. It's been making this big horizontal channel bottoming pattern. It looks like it could possibly be getting ready to break out, which could cause it to run up to around the $19 level. Did you see they also released this week their Omni VR virtual reality rig? They're starting to ship the 17th, so in 5 days, GoPro's new Omni virtual reality rig will start shipping.
Software.
Hey, Bob.
Yeah.
Are you getting one of these new virtual reality rigs from GoPro?
No.
Why not? It's $5,000.
I honestly, I think their business is ridiculous. Yeah. I do. I think GoPro's business is ridiculous. I understand that they discovered a little niche. They discovered a little niche for this, for these activity cameras. But like I've heard several analysts say for a long time that, they can be copied so easily and they talked about becoming a platform, and they just haven't done that. They just keep releasing cameras.
Well, no, part of this now virtual reality with the software they're releasing is tying into their platform, and this virtual reality rig ties together 6 of their cameras. So you can become your own virtual reality producer for only a cool $5,000. But if you own some of the cameras already, you can get into it at a much reduced price point of like $1,600.
I'd rather buy American Airlines. I just don't have any confidence in their strategy. I don't. It's taken so long, and the way that particular stock has performed, I mean, since the IPO, it's just been a disaster. I mean, it reached a high of 98.47, right? That was October, and essentially just went down from there. It had one rally back.
That was October of 2000. What? That was the high of 98.47 was back in 14. So yep. October of 14, not last
October,
year.
And that's important. Thank you for that, Mike. That clarification. It was October of 2014, and then July of 2015, it made a move back, but didn't get anywhere near that. It retraced essentially to mid 60s. Right? What was that high?
A high of 65.49 back in August of last year.
Right, and just it's trading $14.
Yep.
I mean, what do you got to do? You got to make 1,000% to get back to the highs.
I
just have no.
Yeah, it was a fad stock. Now it's fallen out of fad. It is forming a nice bottom though, so it is forming a technical pattern, which I will be watching. But their business model needs some work. Speaking of business models,
I'm waiting.
Why are you waiting? You're just supposed to jump in. You're supposed to know what I'm going to say next.
There's no one that knows what you're going to say next.
Well, hey, you remember we talked about... Oh, really?
There is just no one.
Well,
hey, if I come up with a company named Steak Shack, is that going to be... Is that stealing?
Steak Shack?
Yeah.
We're going to talk about... Because there's something... people are going to have to stay tuned for Steak Shack.
Yeah, I want to open a restaurant called Steak Shack.
Yeah.
Will they come after me for that, do you think?
Hold on. What Shake Shack?
Yeah.
Later. That's just a preview. But first, we have to talk about... I had some doubts about this Apple, because we also talked about this double bottom triggering an Apple, and Apple's now hit the level where we move up the stops. So it's on its way towards... its potential 111 target areas for these. Mm-hmm. But did you see some of these
time frame, please?
iPhone SEs.
Time frame, please.
Weekly.
Okay, go on.
Now you've ruined my chain of thought.
iPhone SE.
No, I know that, but he just ruined it.
All you got to do is say your time frame.
What you should have said was, I went out to dinner last night and had a delicious apple steak.
That would have made no sense. That would have been something that I wouldn't even say. So, did you see these iPhone SE,
yep.
Some of these numbers? Well, why don't you enlighten us then?
Top selling smartphone in the UK, where the Brexit was supposed to put everyone in a cave. Top selling smartphone, 9.2% of market share. Sales of Apple's share of sales in the country grew by 3.1%. to 37.2% in Q2 2016. It's pretty impressive. Didn't do as well as China, obviously, but it did well in the UK, where everyone now lives in caves because of the Brexit.
And they have they have all their iPhone SEs. And you know what was interesting that where Tim Cook was talking about this was important for India and China. Well, you just mentioned China. It only contributed to 2.5% of sales, and India they weren't tracking it. Well, the firm that came out with this didn't track it. I'd like to see how it was doing in India, because that was really one of the target markets.
Yeah, the real advantage of the iPhone SE for Apple, it uses R&D and tooling that was paid for 3 years ago, so everything is a profit, right? So whenever Apple releases a new product, they bundle in the R&D for that first release. And after that R&D is paid for and their tooling is paid for, then they run that model line a few more years, and it becomes more of a profit center, and then they can reduce that price until they can then release their new rev.
Anyone know the price of the SE?
$399, $499, right?
Yeah.
And maybe $299 with a contract.
But then the iPhone 7's coming out. What they announced that September 7th. iPhone 7 September 7th.
Yeah.
No
July
more
7th,
no more
cool.
headphone jack. Is that right?
Yeah,
Is that what they're saying?
Yep.
Yeah.
Well, how do you... So what does that mean? We all got to buy new headphones?
Well, you either have to go Bluetooth or you have to your old headphones. They'll probably sell a dongle-y thing, that you can plug into the connector-y thing.
The real reason for it is there is an audio quality way above what is coming out of a regular analog audio port that those chips provide. So Apple can go super high fidelity with a lightning connector and lightning connector headphones.
That's cool.
So people could hear this podcast in high fidelity.
Super high
that's
fidelity.
Interesting. Yeah, but that's interesting to me.
It is.
So when people talk about Apple not innovating anymore, that may not be innovative in the pure definition of the word, like the touchscreen was, but that's something that will attract people like me. That's something that will attract people. I mean, I like my plug-in headphones simply because of the crappy connection of the Bluetooth and the crappy sound of the Bluetooth. So that's super interesting to me. That gets me actually excited about. And I've been a fan of this stock forever. So even when it was going down, I wanted to buy it.
Speaking of innovation, I gotta see. We gotta have our. I'm not going to talk about Tesla. I'm going to talk about Solar City because I just like to listen to this guy and hear what he's going to do next. Because Elon Musk, now Solar City is going to start producing a solar roof.
Wow. For what? Vehicles?
No, a solar roof for homes. Not where you put your solar panels on your roof. The roof is going to be, these solar panels are going to be integrated with the roof.
So integrated into the trusses and the support.
Yeah. He's not shedding light on how the solar roof will really function. Although he notes that people will be able to customize their design because people like different types of roofs. And when it will be available wasn't really clear either. The Solar City's Peter Rive says the company only started talking about roofing a couple weeks ago. But it's also going to be a key part of the ramp up in production around the second quarter of 2017.
And their power wall isn't out yet, right? That's that module that goes in your house that is basically a backup and a power unit. Basically, you become an energy creator.
It ties in. They're only going to be selling that initially, where you can actually put on solar panels on your house, which sort of rules us out here because we don't get enough sun and we have winter. But so now you got the power wall. You got these. You can have the solar roof. You can ride around in your space bus, which we talked about last week. So we're probably not going to get any much more details. I think they're just throwing stuff out there to try to keep stuff propped up, even though it's not really working for the Solar City stock. But they're going to try to keep stuff propped out by throwing out all this interesting things until the merger is finalized.
Elon Musk is going to be broke or the richest man in the history of the world, one or the other.
I think
there's no middle ground for him.
He's going to have space travel. I think Tesla at some point will be absorbed by another company, and I would long term not ever want to own its stock.
He is going to have a space travel tourism company. He's going to have solar roofs and walls. He's going to have the entire fleet of U.S. consumer vehicles. He's either going to be the richest man in the world or he's going to be just completely broke.
Yeah, he'll either be the new Tony Stark or the new Preston Tucker.
Was there an old Tony Stark? He's fictional, right? I guess that would be Howard Hughes.
Right.
Who Tony Stark, I believe, is modeled after. Crazy. Guy's nuts. Retail sales flat.
Yeah, pretty much.
First time in a while.
Retail sales flat. What else happened? The Fed's labor market conditions index bounced back from its 6 months of declines to a 1% rise, the best since 2015. We're seeing a lot of mixed data. Like something good comes out, then something bad comes out.
The data's mixed, but you know how trail mix has raisins and nuts and some M&Ms? We're starting to see more M&Ms.
Oh, is that good?
Depends if you want to be healthy or full of sugar.
So that's what I was asking.
For me, I want M&Ms. I mean, when I want to buy trail mix, I buy a box of peanut M&Ms. So for me, it's good. I don't buy trail mix. I just buy a box of
are the
peanut
raisins
M&Ms.
bad?
What, raisins?
Yeah.
No,
You said there's more. Well, what's the bad part? Because there's.
The M&Ms are the good part, Mike.
Well, what about the cashews?
Okay, so here's the analogy. The M&Ms are the good part. They're the instant spikes to the market, which continue this Fed propped up model of a market. The cashews and the raisins, which are better long term, we're not seeing that stuff.
Yep. What do we talk about productivity declines down for the third straight quarter, longest losing streak since 1979?
How is this possible?
I don't know. It's the
I
numbers.
don't either. I understand it's the numbers. I'm just trying to understand it. How it's possible to continue to have productivity declines. It argues that we're I don't know. I don't know what to make of it. I'm kind of working through it in my head because it seems to me that jobs continue to gain strength. The 12-month moving average is over 200,000 or close to 200. No, it is over 200,000. The 3-month moving average is around 190. So jobs continue to strengthen. So are companies just hiring less productive people? Are we just spoiled based on the technology-induced productivity gains that we saw for the last 10 years?
All the new jobs are in Washington, D.C.
Yeah, might be that. I mean, government jobs have been falling and private sector jobs have been rising. So that's what that data shows. So I'm wondering if we're just spoiled from the technology-induced productivity gains we saw from the 80s to now. And we're just in a new normal of productivity falling because technology is not increasing as quickly. That just doesn't seem intuitively correct. Honestly, the productivity weakness is puzzling to me.
Could you
don't understand it?
Define to me when you hear a small downward revision?
Yeah.
I read this. I'm like, oh, small downward revision. Due to a 4.7 percentage point downward revision to first quarter hourly compensation. So it was at 4.9%, and then it goes down to 0.2% or something. That's not a small downward revision.
Well, I don't understand what you mean. So there was a 4.7 percentage point downward revision to first quarterly hourly compensation. Unit labor costs decreased 0.2%. Rather than increasing 4.5%.
That's not a small revision.
No, I think I don't. As a small downward revision to output, it's offset by a small downward revision to hours. Well, no. So
what am I
They're saying it was expected rather than increasing 4.5% as reported in June 7th.
Yeah,
they're just referring to the 0.2% as being a small downward revision,
not the 4.7% revision.
No, it's a 4.7% total revision. They're saying they're calling the decrease of 0.2% as a small downward.
Okay,
revision.
so they're not saying the revision of 4.7% was small. That was not small.
It's bullshit, is what it is. It's a way of them calling it small when the actual revision is huge. They're just referring that to that 0.2% decrease. Again, revisions are a pain because they have scheduled dates they need to release data on, and oftentimes, more often than not, the data is not complete. So in order to give the market a timely idea, but when you have revisions like that, it just adds to volatility.
Yeah,
I don't know.
Well,
it seems to me that they should just say we're not releasing any data until it's complete and just push the dates out a couple of months.
But we need on-time information, Bob.
We need on-time incorrect information rather than late correct information.
Well, retail sales fell month over month, missing expectations.
First time in a while.
Weakest since January, so that is first time in a while. You are correct.
Yeah.
The drop in weakness in gas station and sporting goods sales. I don't know how that's tied together, but along with department stores. But that actually ties together with. Did you see Macy's this week?
Yeah, but there was also an increase in non-store retail sales.
In non-store retail sales.
Yeah, so internet
sales.
Right.
People liked, or investors liked what Macy's said. They're closing 100 stores.
Yeah.
And their stock took off.
Does that stuff make anyone else sad? The closing of stores?
100 is not an insignificant number.
No, it's not. I mean, does that make anyone else sad? I mean, I've never been a shopper, ever. But going to stores, I don't know. Maybe I'm just being nostalgic. I just don't want to sit in the house all the time. I already work in the house, you know. It's like I want to have to go to the store for something. Gets me out of the house.
Well, hey, now you don't have to leave again, and you have an alternative to Amazon also, because Walmart's buying Jet.com for $3 billion.
Did you hear about the guy who won 100,000 shares of stock in a contest?
No.
Okay, so about 2-3 years ago, I don't know exactly when, I heard it on the local news. There was this guy who on a fluke dropped his business card, his electronic business card, into a contest that Jet.com was having. And they just randomly picked somebody to receive 100,000 shares of stock and some coupons for shopping on Jet.com. So he shopped and he got his 100,000 shares of stock. And if this deal goes through, they're worth $20 million.
Wow.
Yeah. It was when Jet.com was like at 5 cents or something. I don't know. I don't know why they would just gift somebody 100,000 shares of stock at any price. It's a big number. But now his shares are worth $20 million.
Yeah. So
crazy.
I guess it was just Walmart trying to make a bigger play into. I don't know if they're buying Jet.com because it's not that big a company yet, and but maybe it's a technology play because of the way they aggregate. Because they're an aggregator, right?
Who? Walmart?
No, Jet.com. Their business model. You know, you can go up there and it's sort of because your stuff gets shipped out from different companies and in your Jet.com box, but I think they search a lot of different companies to see who has got the best rates and will hit certain prices.
I wouldn't be surprised if they were just going for the employees. They were just going for, experience and getting those people on their team.
So here's the thing. So Jet.com's original business model, if you remember, was a membership model where you paid $50 a year and you got all products at cost.
Right. Then they dropped the $50 fee.
Yeah, they couldn't make money doing it. They ended up becoming, like Mike said, an aggregator. But from what I understand, this deal is, as Stafford said, mostly about management, mostly about Mark Lowry, because a lot of the deal is in stock that vests. And Mark Lowry's first company was diapers.com, and he also had soap.com under the same heading. Under the same heading. And he also co-founded Quizd, the parent company of those two websites, and he sold them to Amazon for $545 million. And then he worked at Amazon for a while. So he started those companies, sold them to Amazon, then worked at Amazon, and his deal at Walmart keeps him there for 5 years or something, this particular deal. So it does definitely seem to be about, as Stafford said, the employees more than anything. And they have the expertise to compete with Amazon now.
Yeah, so it's interesting how Walmart is. I don't know if it's worth the $3 billion, but you know what? I guess Walmart's got the money. Now, speaking of jet, why don't you talk about American Airlines?
Oh, look at that. Look at that. Jet fuel prices are at the lowest we've seen from the refineries. The refineries have improved the process of jet fuel production. So jet fuel is at historic lows, and there's stockpiles of jet fuel, so it's theoretically going to go lower. If I'm right about crude oil going to going to close to 47 and then falling toward $30, when you look at an American Airlines chart, I like the price action. I don't technically have any sort of buy signal, but I like how it broke out and came back to a potential of forming R zone. We don't have a full R zone.
It's got an ice cream trade, Bob. It's got a weekly ice cream trade.
It does have a weekly ice cream trade?
Yes.
Okay, good. I call that the alligator pattern, only because I can draw it to look like an alligator. But I like American Airlines over Delta. I think Delta has some PR problems right now, and the pattern's not as good. And Delta has a ways to go. So I want to buy American Airlines as a play on that jet fuel thing. As well as with the summer driving season coming to an end, airlines tend to get a brief spike because travel tends to get shifted to flying instead of driving.
Yeah, and I have a target on that of about $41.
Okay, that's perfect. I wasn't looking for too much. This is definitely a trade. Which that's not bad. I mean, that's 10
Yeah, and you're right about Delta Air. Their stock's sort of down this week. They had a disaster on Monday.
I like that trade. I want to buy American Airlines fundamentally, and I like the pattern. So, and
Yep.
as you know, again, with the problems that Delta just had, there will be some people, i.e. Chipotle, that will leave Delta just to say, well, they screwed things up. I'm going to move on to, I'm going to take an American flight. You're starting to get a few more options. I mean, certain cities like in Chicago, we're pretty much married to United. I don't like UAL stock at all. And I don't like Delta, again, because of the pattern. But, you know, in certain cities, you're married to certain carriers. But American Airlines is starting to make headways into places, and they still have huge presence at all the major airports, obviously. So I just like the stock.
You want to know what I don't like?
Tell me.
Gap.
Gap.
Gap. Don't you shop at Gap?
I don't. I don't really like bricks and mortar retailers at all, but, you know.
Yeah, I'm not. We have a potential double on a daily time frame. Now it's
Symbol, Mikey?
Huh?
Symbol, please.
GPS.
Okay.
Gap Incorporated. Their July comparable sales down 4% versus estimated down 1%. We still have a daily double top. It's a sloppy double top formation. If we get below the 23 level, really the 2293 level, it could trigger. It might become invalid if it rallies up a little higher, but it's just something. I'm not a big fan of the stock, and it's producing topping patterns, so that's what I'm going to keep an eye out for. But their sales are suffering.
And
Sorry,
just to be clear, no signal yet, right?
no signal yet. No signal yet.
So Mike is on the sidelines till he gets a signal.
I am just watching it as a potential topping play, and I noticed that the some of the information there that's coming out on them is not so strong. Hey, the Walt Disney Company just released its third quarter earnings. Did you see what those were, Bob?
I did. 162 per share revenue of 14.27 billion, close to 0.28 billion. Expected to get 161 per share, and they beat revenue estimates by about 0.10 billion, which would be 10 million. Excuse me. So media network revenue grew 2%. What's going on with the whole ESPN thing? Has that changed at all?
Yeah. Well, I was wondering because that's one of the things they were announcing this. The media networks revenue grew by what you said 2% to 5.906 billion, but then they were talking about, and that tied in with affiliate and advertising revenue growth at ESPN. But what was most interesting that has to do with ESPN, the Disney confirmed reports it's making a $1 billion investment in BAM Tech. I just like the name and that BAM Tech, which is a spinoff from the Major League Baseball's advanced media business that, among other things, it works on technology for streaming video services like HBO Now. So BAM Tech is working on ESPN with a direct-to-consumer ESPN-branded multi-sport subscription streaming service. So it looks like ESPN via Disney is going to get into the cord-cutting aspect. So it's not just Yahoo. It's now ESPN.
Well, sports has been the big holdback for truly cord cutting.
Yeah, for me it's business news, but I think that can actually be achieved now. There's a couple of the trading platforms that Mike and I use. One of them has a live feed to CNBC, and Bloomberg has always had live TV for nothing on their app. So we're starting to get to that point where I don't need those anymore. But sports is tough. I mean, especially when you live in a cold weather city, you could always go to your local watering hole that plays the sound and watch the important games. That would be difficult with baseball because I watch a lot of baseball. But sports has always been kind of the issue with me. It used to be business news, but that's kind of cleared up now.
Sports quarter sound effect. Awesome.
Sports quarter sound effect. Now, you know what I need a sound effect for? Shake Shack burger hitting the floor.
A burger hitting the floor?
Yeah.
That'd be a gross sound.
Yes.
I've eaten a lot of burgers lately. So I live in the
West.
West.
At Shake Shack?
No, I still have not eaten at Shake Shack, but I live in the West Loop, and the West Loop is voted third best neighborhood in the United States. Anyway, the West Loop in Chicago has become a big hub in the last, say, 5-6 years, where there's just every new restaurant that opens in Chicago of any note tends to be in that neighborhood. And there's actually a place called Smith and the Loyalist. Smith is one of those restaurants that sells tickets. Those are starting to pop up in the U.S. where you buy a ticket and you eat what they feed you, and that's it. So it's more about an eating experience. That kind of stuff doesn't interest me. But the Loyalist is the bar downstairs, and it's in the building that I live in, and they have a really good burger. Umami Burger is there, and Shake Shack is going to open up in the West Loop. And I haven't, I haven't eaten at Shake Shack because I refuse to stand in line for a burger when there's so many good burgers. But they did beat earnings again, 14 cents versus 13 cents. But revenue, $66.5 million versus an expectation of $63 million, according to consensus. Comparable sales store grew at 4.5%, less than 4.9. You want to see comp sales be somewhere in the 6 to 7% range, but I think it's different with a smaller company that just can't market as well. But
their
starting to
stock
get a lot
price got hit pretty hard.
Yeah, and I think one of the things that people are realizing in the vein of like a Krispy Kreme is that a stock like this is difficult to own long term. It really is. I mean, when their stock was nearing frickin', I mean, up in this $40-$50 range. I mean, what's the all-time high? Do we know the all-time high of Shake Shack? Is it $47 on that stock? I think it might be higher than that.
The all-time high was $96.75.
Yeah, I mean, again, when you look at a restaurant that has, I don't know how many stores they have, and I'm not prepared to look it up. But when you look at a stock that's trading at about 70% when it was in the 90s, at about 70%, actually, when it was in the 90s, it was trading close to McDonald's stock.
Right, which is absurd.
It's absurd. Even, Burger King. I mean, even trading in the realm of Burger King. This is insane for the kind of revenues that they have. It's nowhere close. So those stocks are tough. We saw that with Krispy Kreme as well. It never really recovered.
Now, I want to talk about something real quick, and then we will get to Burger King because there's big news from Burger King. But first, Shake Shack, because this has been on my chart since it triggered the week of July 13th. We had a breakout from a horizontal channel bottoming pattern. Okay, which started establishing itself in April. We broke out. We closed above the key level on the July 13th. The target for that was 42.93. The high before they released earnings was 42.94. Now so it completed the pattern pretty much to a penny, and now since they released earnings, we're down to 38.32.
Wow.
That was just. I mean, this is. When I typed that in after they released I said, wow, they completed that pattern to the penny, and then boom. They took a nice little haircut. Did you see the big news from Burger King, though, this week? I am psyched. They are unveiling the Whopperito.
I went to YouTube to look at reviews, and they're just starting to hit, and I cannot wait myself.
But I'm just going to have to try a Whopperito just based off the name.
Well, what are the reviews saying?
These haters wanted to go in and hate it, and they couldn't say anything bad about it. And they were eating it in their car, and they can't say anything bad about it.
Oh my God.
They say it's better than a Whopper. That's what they're saying.
This is the fact Burger King's calling it the son of a Whopper and a burrito. Oh, wow. It's only going to be offered for a limited time, though, so we better run out to. That might be the real reason why Shake Shack took the hit. It's nothing to do with their downward revisions. It's due to the unveiling of the Whopperito.
Well, the stock did jump.
What is the symbol for Burger King?
It's Carol's Restaurant Group. It's TAST or Tasty.
TAST.
Yeah, it's Carol's Restaurant Group.
The stock did take off on the announcement of the Whopperito.
Quite substantially. I mean, the stock and the jump in the stock when they announced it was 10%. And it was just a huge jump.
Well, is this now? See, did Burger King just beat Chipotle to its own game? Remember we were talking months ago, Chipotle was talking about doing some kind of burger offering, which you sort of have the burger offering with Chipotle. That's sort of like a marriage of a burrito and a burger kind of concept, and Burger King just one-upped them.
Yeah, they really did. I haven't been in a Burger King in forever. I heard really bad things about their grill dogs. I mean, I heard that their grill dogs were just inedible. It was, and the stock did get hit around the time of the grill dog release in May. It got beat up. Not the kind of spike we just saw with the announcement of the Whopperito, but Tasty stock did. And Carol's Restaurant Group owns more than Burger King, obviously, just so people know. But the stock did get hit with the grill dogs, which they're still on the menu. So hopefully the Whopperito becomes permanent and they dump the grill dogs.
Well, just the name of the grill dog is not as exciting. I mean, you gotta name your product like a Whopperito. Now, if they had renamed the grill dog and people liked it, maybe that would have been better.
Yeah, it's Carol's Restaurant Group owns 650 Burger King franchises across the world. So they're by far the largest owner of Burger King franchises. They're not the owner of the company, but they're the proxy for Burger King stock.
You know, I like to talk about these bottoming patterns.
Yeah.
And why we don't rush into things. So, like, I'm still watching Chipotle for a potential good bottoming pattern, which is not unfolded yet. We did have that trade we mentioned a few weeks ago, but that was just a trade, not an investment. One stock that a lot of people were rushing into, and a lot of people asked me over the last week, was it a buy? And I kept saying, no, wait for a bottoming pattern. And, you know, we were up one. Do we sort of a dead cat bounce? Do you know what stock I'm talking about?
Nope.
Bristol Myers Squibb Company, which took a huge hit. Actually, what was it, last Friday? The FDA, I guess, did not let them move forward with one of their big trial drugs. It did not succeed. So they essentially dropped, you know, from 75.30 to now they're trading at 60.90, leaving a huge gap behind. But, you know, people rushed into it on Monday. Oh, it's a great buy. It's a great buy. And it rallied a little Monday from 62 to 64, but now it's back down to $60.90. That's one of the things from so many people just try to pick bottoms, you know, and they do it prematurely.
Yeah, it was the news came as a big surprise to Wall Street, where their blockbuster drug failed to effectively demonstrate that it slowed the progression of advanced lung cancer in patients. It was Opdivo is the name of the drug, and it failed its efficacy tests. And that was a big surprise to Wall Street. They got downgraded by a couple of companies. One specific analyst, though, Argus, whose name in the analyst company, says that the sell-off is overdone. I don't think so, because the stock was rallying. It essentially rallied from $61 or so up to $77.12. Excuse me. Mostly on the anticipated approval of this drug. So when you get a drug that isn't approved and it goes back down to where it was when the talk of the drug started, that's not overdone. That's a rebalancing.
Right. So this at some point will be a buy again. And I'm going to be watching for a technical pattern, but it's not just a buy based off it dropped.
Right. And that's what happens to a lot of people. They're like, no, it's a good company and it fell. But you have to kind of look, if you're going to trade fundamentals like that, then you have to look at what exactly happened. And, you know, I still maintain that Mike's way is my way and it's the better way. Is that if there's a company that drops like this, yeah, it's fine. I mean, look for a place to buy it, but don't buy it just because it dropped.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Why would you buy? So why would I have a why? My why is, going back to the old standard for me on the why, is crude oil. You have to, I mentioned a little bit of it earlier in the show, that refineries are going into turnaround. One of the things you have to look at with crude oil is that initial moves on crude oil are speculator move. They're speculation. Okay, they're the sort of proprietary traders looking to trade in and out of crude oil when there's news like that. Producers who I talk to some producers and some buyers of the actual product about crude oil. They actually know what's going on with the physical market. They don't look at the futures. So it was interesting the other day to notice that when I was on TV, which Stafford played the clip earlier, people were talking about what OPEC was saying rather than talking about this refinery fire in Louisiana. And we had an example a month or so ago of what a supply disruption, the fires in Canada, what a supply disruption can do to the futures price. And now we're seeing it again in a refinery, which again, refineries are the consumer of crude oil. So when you see something like that and the news is not reporting on it, it always strikes me as, even though I'm one of the people on the news sometimes, you cannot trade off of what people say, because they were talking over and over again about what was driving crude oil price, and they kept referring to OPEC. And when I talked to the actual users of the product, they said, no, we don't care what OPEC's doing. There's a fire at a 225,000 barrel a day refinery, the second largest in the Gulf Coast. They said that's what all the actual physical users of oil were looking at. So the why, the moral of the story is, don't trade news. As much as I enjoy talking about it, you can't trade news. You can get an opinion, but then you have to look at a chart and see if that chart backs your opinion up. What do you have to say about that, Mike?
I don't have a what.
All right, that's great.
No, there's a interesting copper. We've talked about copper a couple times. No, I feel like that's nearly we touched on silver, so I got to tie it into copper. There's no bronze I can talk about, so I'm going to tie it into copper. Copper is trading against its 200-day moving average again, and which has provided some support recently. It's right now trading 215. I have a critical line in the sand at 212. I'm watching for a close below this 212 level on a daily basis. If we get that, I'm looking for copper to run back down to about the $2 to 202 mark. And copper is an industrial metal. We could be seeing another sort of projection of a slowdown coming, because copper's been slowly edging its way back lower again. Bob?
All right.
You don't have anything to say about copper?
I don't know. I mean, the industrial point that you make, it's, housing has been suffering a little bit, but copper's a proxy for China, and I'm just not sure what to think of China right now. So I'll defer to the chart pattern.
Well, there's an interesting level around the 212 level, so that's what I will be watching for, that if we get a close below, it can break lower.
Time frame?
I said a daily.
Okay, I didn't hear you.
I said that before. Yeah, I said it's on a daily. So this is not a weekly basis. This is a daily basis I'll be watching this for. And this is a short-term pattern. This is not something that would, if it gets closed below that 212 level, it's a trade that will take maybe a couple weeks. We're not looking at this to stay in this for months.
This is a good way to wrap it up, because what you can do if you're somebody who enjoys news or fundamentals is, when you learn price action the way that Mike and I teach it, or anyone else credible, you learn price action. And then what I tend to do is, when I'm looking to get into something, I remember the levels, and I'll watch the financial news, and I'll say, oh, wow, that looks like a bullish report. Maybe my trade is triggered, or maybe we're getting close to the trade I want to take happening. That's really all that news is good for.
Why? I'm hungry. What? Whopperito this afternoon.
Is it? Hang on. Is it at the stores yet?
No.
When does it hit? When does it hit this area, the Chicago area?
Oh, August 15th. 3 more.
Next show, ladies and gentlemen.
Monday, you will be standing in line for a Whopperito.
Can we make a commitment that all 3 of us get a Whopperito before the next show?
This is going to be groundbreaking podcasting.
All All right, and on that note, I'm going to take off and head for a colon cleanse.